unified system in accounting. Okay, so we
Yes.
call him Luca Pacioli. He
Yes.
invented, he came up with this system called double entry accounting, or you can call it double entry system. So he is the one who came up with the system. Are you with me?
Yes.
That's why they refer him as the father of accounting. Okay, so it means he's the one who came up with the system. So sometimes when they ask you in the test, they can just give you who is the father of accounting. Sometimes they just give you multiple choice where you have to choose. So you must know that Luca Pacioli is the one who came up with the system, double entry accounting, and then he is referred to as the father of accounting. Did you get that? Are you still with me?
Yes.
No problem. Any questions so far?
No, no.
No. According to this system, let me see. He started this system, but they say, Luca, according to Pacioli, a business needs, I think if you can check our accounting, the business needs the following. We need to have sufficient cash or credit. If you remember, most of our transactions are based on cash. Some of them, sometimes we buy on what? On credit. So that is true. Sometimes we buy for cash, sometimes we buy on credit. But you know that we need cash more than the credit. Are you with me?
Yeah. Yes.
There must be a balance between the two. There must be a balance between the two. But we need to make sure that we have got enough cash on hand so that we can be able to run the business. But here and there, we can buy on credit, we can sell on credit. Like you as an individual, sometimes you don't afford to pay for cash. Can you see now? Maybe you pay a deposit and then the rest you pay installment. It's like school fees. Most students don't pay cash because they can't afford. Can you see now? So again, there must be sufficient amount of cash and or what or credit. Okay.
Yes.
Now we say through bookkeeping. Remember we spoke about the difference between bookkeeping and accounting.
Yes.
But we still have to go through that. So I'm going to show you the difference between bookkeeping and a bookkeeping is basic accounting, like the basic. What we're doing is bookkeeping. What we're doing, you and I, like currently. So we're doing bookkeeping. So you'll see as you progress with, let's say, to a degree, you'll be doing the real accounting. But I'm going to give you the difference between bookkeeping and accounting thereafter. Okay.
All right.
So bookkeeping, as you can see, consists of what? Of list of transactions. You know that, I think you know what is a transaction.
Yes.
That's why when they ask you, yes, when we buy something, when we sell something, so whatever we've been recording in account equation, those things are referred to what? As transactions. So in bookkeeping, we deal with the transactions to make sure that we understand them so that when we go to record, at least we can interpret them easily. Can you see now?
Yeah.
Now, again, according to Pacioli, he said there's a statement that is very much important, a statement of cash flow. In a nutshell, cash flow is important. I'm telling you, everywhere cash is imperative. Why? Because without cash, we cannot be able to live in this world. So cash flow is important, but what we normally do, we need to make sure that we check the inflows, because the cash flow can either be inflow, and we must also check the outflows. That's why in your bank account, you always have money coming in and sometimes money goes out. Can you see now? So it is important for you to check your cash flow. Why? Because you want to make sure that your inflows are more than the outflows. I think that is how we live in life. So what I get must be more than what I pay. Does that make sense?
Yes.
So the system that the statement that we use for that is called a statement of cash flow. You will see as when you go and do, let's say by the time when you do your degree, you will see they will ask you to open a statement called statement of cash flow. Sometimes we call it cash flow statement. Are you with me?
Yes.
No problem. Now, according to Pacquiao again, there's a statement that is very important, which is the statement of changes in equity. So when we talk about the changes in equity, for example, we talk about equity, we think of what? Of an account. Remember, I did tell you about the two accounts that we have under equity. Do you still remember them? Can you name them?
Uh,
There are only two in our level. There are only two in our level.
under equity, right?
Yes, there are only two of them. The other one is positive, the other one is negative. Let me help you. Let me help you.
Alright.
We have got capital. So capital represents equity because capital is the positive equity. So when we talk about the statement of changes in capital, in equity, it's the same as statement in changes of changes in capital. So because capital changes over time, sometimes we've got more capital, sometimes we've got less capital. Okay. Like if
Yes.
you've got more incomes, the more incomes you have, the more capital you're gonna have. If you've got more expenses, your capital is gonna change. So we must also check the movement around capital. How did the capital change? What changed capital? Which impact was on capital because of the changes in those variables? For example, if we change incomes, if we change expenses, remember, if you compare incomes and expenses, you normally get, if you compare income, if you say incomes less expenses, you either get profit or loss. Okay,
Okay.
so
Yes.
it means between the profit and loss, this one, the profit will affect capital positively. That's a fact. Can you see that? But
Yes.
the loss will affect capital negatively.
Negative.
So that's how we talk about
Yes.
the movement around capital. Can you see now? So we need to understand those things. Are you okay so far?
Yes, sir.
Perfect. Any questions?